Hello. Welcome back to Truss Talk. I'm Jeff Miller, CEO of Truss Financial Group.
Today, we are tackling a topic that usually gets one of two reactions. People either think it's a brilliant retirement miracle, or they think it's a predatory scam designed to steal your family home. I'm Jason Nichols, partner at Truss, and I'll be honest, if you're judging reverse mortgages based on the late night infomercials from 20 years ago, I don't blame you for being skeptical. There was a time when the fine print was a mile long and the protections were thin.
But it's 2026. The regulations have tightened, the products have evolved, and at Truss Financial Group, we're seeing high net worth retirees use these as sophisticated wealth management tools.
So today we're stripping away the noise. We're going to talk about what's a myth, what's a fact, and why the modern reverse mortgage is actually one of the most misunderstood pieces of the American financial puzzle.
Let's start with the biggest myth of all, Jason. I hear this at least once a week. If I get a reverse mortgage, the bank or the lender owns my house.
This is factually 100% false. With a reverse mortgage, specifically the HECM, home equity conversion mortgage, or our jumbo proprietary loans, you retain the title. You own the home. The lender just has a lien on it, exactly like a traditional forward mortgage.
Right. You still pay the property taxes, you still pay the insurance, and you're responsible for the maintenance. The bank doesn't want your house. They aren't in the real estate business. They are in the interest business.
So true, Jeff. Another big misunderstanding people have with reverse mortgages is that the heirs get stuck with the bill. In 2026, these are non-recourse loans. That is a huge fact check point.
Yep, do explain what that means for the kids.
It means if the housing market tanked and you somehow owed $1.2 million on a house that's only worth $1 million, the bank cannot go after your heirs for the difference. They can't touch your kids' bank accounts or their own homes. The FHA insurance or the proprietary insurance covers the gap. Your house is the only collateral.
Now let's talk about the Truss Financial difference. Most people think reverse mortgages are only for $300,000 houses because of the FHA lending limits. In 2026, those FHA limits are often too low for our clients in places like California or Florida.
Exactly. If your home is worth $3 million, an FHA reverse mortgage is practically useless because they cap your claim amount way too low. That's why we specialize in jumbo reverse mortgages.
We can go up to $4 million or even $6 million in some cases. This isn't last resort money for people who can't pay their bills. This is liquidity for people who have millions of dollars locked in their drywall and want to stop pulling from their 401k during a market dip.
Think about the math. If you have a $2 million home and you're currently paying $6,000 a month in a traditional mortgage, you're burning through cash. With a jumbo reverse, we pay off that existing mortgage. Suddenly that $6,000 a month stays in your pocket.
You didn't just get a loan. You just gave yourself a $72,000 a year raise, tax-free, without selling a single share of stock.
Jeff, we have to mention the financial assessment rules that came in a few years back. This is why it's not a scam anymore.
Right. Back in the day, lenders would give a reverse mortgage to anyone with a pulse. Today, we have to verify that you can actually afford the taxes and insurance for the long haul. If we don't think you can, we actually set aside a portion of the loan, a life expectancy set aside, to pay those bills for you.
And the non-borrowing spouse protections are huge now. In the old days, if the husband was on the loan and he passed away, the wife was evicted. In 2026, the law protects the spouse. They can stay in that home for the rest of their life, even if they weren't on the original loan.
It's about aging in place. It's about staying in the neighborhood you love, with the neighbors you know, without the stress of a hefty monthly mortgage payment hanging over your head. So, is it a scam? Absolutely not. Is it for everyone? Also no. If you plan on moving in 2 years, don't get a reverse mortgage. The upfront cost won't make sense.
But if you are 62 or older, or 55 in some of our proprietary programs, and you have significant equity, this is a conversation you need to have with your financial advisor.
At Truss Financial Group, we don't just sell these, we consult. We'll run the numbers for you. We'll show you the difference between an FHA, HECM, and a jumbo proprietary loan.
We'll show you how a reverse line of credit can actually grow over time, giving you a bigger safety net every year you don't use it.
Stop listening to the myths from the 90s. The 2026 reality is that your home can be your greatest retirement asset.
Call our loan officers at Truss Financial Group. Let's see if we can make your house start paying you for a change.
Thanks for listening to Truss Talk. We'll see you next week.